Good day, ladies and gentlemen. On behalf of Fin Portal, I extend a warm welcome to you all for our first ever Investor Company Connect virtual event Value Portal, where capital meets businesses. We are pleased to begin our session with Crayons Advertising Limited, India's premier independent full-stack marketing communication agency founded in 1986 by Kunal Lalani and headquartered in India. Evolved from media services to a technology-driven powerhouse, it delivers end-to-end solutions, brand strategy, creative campaigns, digital marketing, PR, events across FMCG, BFSI, real estate, with operations in major cities, Dubai and GCC. Before we proceed, please note that this call is being recorded and some of the statements made during this call may be forward looking and are based on current assumptions, which involve risks and uncertainties. Actual results may differ. The company assumes no obligation to update these statements unless required by law. We encourage all participants to consider these factors and avoid placing undue diligence on forward looking information. From the company sides, we have Mr. Kunal Lalani, Chairman and Managing Director, along with other key speakers such as Aranjan Barkotra, President and CEO, Ashray Lalani, Whole-Time Director and Director, Technology and Growth, Mukesh Singhal, Chief Financial Officer. I will now hand over the call to the management for their opening remarks, after which we will move on to the Q&A session. Participants who wish to ask a question may type them in the chat box from now onwards. Thank you and over to you, the management.
Yes. Yeah. Hi. Welcome you all to this session. We are from Crayons Advertising, and what we are here, we're going to talk about the exciting times what advertising is going through. There is a change of the way the industry is transforming itself, and I'm glad to share that we are also keeping pace with time. As she mentioned, the brief introduction, we've been in the business for 40 years. Actually, coming July, we'll be completing 40 years. And what is important here is all these 40 years, we were on our own as an Indian agency. We had our own standing. And while this industry is totally taken over by multinational, we stood our ground and we won over with the businesses. And today we are among one of the top Indian-owned agencies if you look at the Indian advertising industry. Our journey has been fantastic, starting from Delhi, going to all over the country and going beyond the borders. As she mentioned, we are headquartered in Delhi, then we have branches in Bombay, Calcutta, Chennai, Jaipur, Lucknow, and Chandigarh. And then recently, we have also started our office in Dubai. Our journey has been interesting. We started from Delhi, and in the sense, we have a very healthy mix of brands and the corporates, plus the top-end private sector, government accounts. We believe in growing with our clients, and there are a lot of clients who've grown with us. And as we grew this 40 years, we have diversified into all areas of advertising, which is media, which is creative. We ventured into digital and have done very well, and all the mediums as well. So we have a specialist arm taking care of outdoor, specialist agency to take care of digital. And of course, now we are equipping ourselves to go more ahead in the future with the adoption of technology and AI into our business. So we have a healthy mix of private sector brands and government to keep a balance, because we have to keep a balance between creativity, visibility, and of course the bottom line and the margins. So that's why the interesting mix of clients comes handy for us. We've had a good year this year so far, and we in fact intend to do even better than what we did last year, despite the competition, despite the changing scenario. And we are more than confident that we will do even better this year as compared to last year. Going forward, we are equipping ourselves for the next year. Specifics, would you like to talk about, Kunal?
I guess we will. Hello, everyone. And now we will, I guess, come back with some of your questions, and maybe that will answer some of the directions that we are going to be choosing in the coming financial year.
See, for us, I'll add to that. We are looking at a major action in this quarter, which is coming up, because typically this is the season. This is also the time where the clients exhaust most of the budgets what they have. So we're looking at very exciting last quarter, which should help us in getting really good numbers.
Thank you, sir, for your insightful remarks. We'll now move to the Q&A session. Participants who wish to ask questions may drop them in the Q&A box.
Hope you have some investors out there.
Kushi, nothing is visible here. If I don't know.
Audience, please put your questions in the Q&A tab. So I'll just read it out loud and management will answer them.
Okay.
Question writing में शायद वो तालु direct
So we have the first question from Pritesh Vora sir. The question is, can you please provide segment-wise business and growth in each segment?
When you say segment, what do you mean by category of advertiser or category of media?
Outdoor advertisement, etc.
Okay, I really won't have the specific numbers, but what we can definitely say in terms of digital, in terms of outdoor, and in terms of experiential, which is outdoor events, we have way better margins and volumes both.
Let me interject over here. So broadly, the divide that we will give you in percentages. Broadly, our percentage, and it varies year to year. Not necessarily that it follows the same pattern, depending on the client's needs and the market conditions. So currently, we would be about, I would put it about 50% would be about print. That's called publishing newspapers. We would be about 20+% would be about digital. Out of home this year is not too large. Would be, I would put it that out of home would be little less than 10%, and that would make it about 50 to 70, 80, and 20% would be event, and I can't give you specific, and television currently. That's the broad breakup that we would provide you with. And this can vary by about almost about, let's say about 5 to 10% every year. Sometimes events can go up to even 25%, and that was the highly profitable side of the business. And we are assuming that next year, 26, 27, we should be able to achieve about 25% of our top line through events.
Okay, sir. Now we'll have another question from Sumanta Das. What is your outlook on the industry's future prospects?
See, as all of you are aware, that there's a very big shift happening in the entire marketing, communication, advertising, or any kind of marketing exercise which is happening with AI coming in as a very, very big tool to be changing how all these activities are going to be carried forward. So it's an enabler, and it's just that it's moving very fast and it's bringing about those changes which will change the revenue model. And as we are seeing, it is changing over the last one and a half years. I guess a lot more is happening in this year, 2026. So the years coming forward, we feel that the technological advancement will lead to a lot more revenue and obviously lower costs. So what AI is going to help in doing is really lower the cost, and that would help us make it a more profitable business in various segments.
I think the AI would lead to better efficiencies. You can increase your output using the same resources without investing or increasing the resource cost. You can expect a better output and better efficiencies. That's where we are deploying our AI technology and resources to do that. And it's not going to be confined just to creative. AI is being used for us in media, in buying efficiency, in creative, and our systems.
No, even finance, accounts, everywhere. It's going to change. It's going to be a sea change at least in the next 12 months.
Okay, sir, next question we'll have from Tejas Khandelwal. The question is, what is 75 crore loan and advances in the balance sheet?
75 crore loan. I don't think so. Either they have misread it. There are no loans and advances of 75 crores. There seems to be some communication gap. We have got only cash credit limits for a working capital requirement. There is no 75 crore of loan, not enough.
Okay, so next question we'll have from us Vinesh Sharma. The question is, what is the acceptable margins since they have fluctuated a lot in last 2-3 years? By margins, I mean EBITDA margins.
So as we mentioned earlier, the fact is that as you said, the business is divided into segments. Segments like print, television, digital, out of home, events. Now, broadly, what that does is that each one has its own, let's say, profit margin business. However, it doesn't remain static that every year is the same spend. Even client-wise, it's not the same spend. Now, as you can understand, that initial competition has been pretty strong in the last few years. So margins have been in some segments gone down, or overall volumes have to go up for margins to improve. So I would say that is where the differences in the EBITDA has come in. That margins have really not been as good as maybe, let's say, 4 years back or 5 years back. So we would assume that with this new technological shift, the ad tech technology, again, we'll be able to increase our margins in times to come.
So we have a follow-up question from Tejas, sir. The company has given 75 crores of loan and advances, including both current and non-current. What is that? It is lying in current assets and liabilities.
You have access money to them. So that's 75 crores. That's the 75 crores. Current assets. To current, that must be, I think there needs to be a review, relook at it. There is no 75 crores. There are some assets or some deposits which have been given, but that's it. We have not. It will be more in the side where the company has some funds. It's an asset, current. It's an asset. It's not a liability. They are asking, we have invested 75 crore in where 75. But we have not invested. Yes, some spare fund we have invested in. So those are assets. So there would be no problem in assets. Kushi, your question is not clear to us. Is it we have taken loan or we have given?
They have wrote the company has given 75 crores of loan and advances, including both current and non-current. What is that? It's lying in current assets and liabilities.
No, so it can't be liability. No? That's what we are saying. And in the current asset, these are advances being paid to various jobs that we do, events we do, etc. And whatever surplus cash we have, it must be somewhere given out on interest. That's it. It's all assets. The point is, what would be the question on that? What is unbilled? Wherever we paid advances, etc., and we have not billed in that period of time, and the billing work is in progress, etc. It mostly would be that.
So we have no loans. Huh?
No, they are not also asking investing. They have asset management.
Okay, sir. Let's move to next question. We have another question from Bhumika Bhattar. That is, what are the areas and growth factors you see in the coming years?
Can you repeat the question, please? It was not clear.
So the question is, what are the areas and growth factors you see in the coming years?
So obviously, as we said, with technology, the cliched word AI coming into every aspect of the businesses, whether it's our business or any other business, a lot would change in terms of what kind of revenue streams which will be created within the same segments. But it'll be quite different in times to come. Besides that, our thrust has been that we are moving a lot more into the government backed businesses, which is PSUs or governments, various state governments or central government, which, if you all would see, have also realized that they need to be very, very visible. And so a lot more of advertising or communication is happening from every part of the government now. And that opens doors for newer businesses, newer projects coming in from there. And those are quite large in volume. So I guess we are specializing, we're trying to get into the specialization of that. And that is what we see is going to give us at least a 20 to 25% growth in the years to come, every year on year.
So next question we have is, why our margins are way less than our peers?
Currently, I do not know which peers you're talking of. There are not many peers. Most of them are outdoor companies which own assets. They are not advertising companies. They are actually asset owners. They are just like any rental shop or any other kind of rental business that they do. They are not. They may have advertising in their name, but they are not into advertising the way we talk of advertising. They own the assets. So they are just like a publisher or let's say a radio station or a television station. So what we do is we are into creative. We are buyers. We are not sellers. We create advertising for a client and we buy media to execute that communication in whatever the need of the client is. Whereas most of the companies which are talking of peers are all only into outdoor hoardings which they own, or rather they're leased out and they rent it to anybody.
Okay, sir. So the next question is, which are our key clients? They want to break up private and government.
See, we have a healthy mix of government and private clients both. For instance, to begin with private, we handle Tata Group, the entire group. We handle their social media for them. We handle a lot of brands. We work on Cornitos. We work on an Adani brand. Okay, so these are the kind of brands what we have. We have businesses. If you look at the PSU section, then we have LIC. We work on tourism, which is Goa tourism. We have Maharashtra tourism. We have Uttarakhand tourism, which are like, and of course, we've handled a whole lot of other tourism brands. We are also on the panel of Incredible India. And these are the guys, mind you, who spend a lot of money today in terms of promotion. The country's top PSU, including NTPC or Power Grid and Indian Oil, Hindustan Petroleum. If you look at banking, right from State Bank of India to Bank of Baroda to Indian Bank to Indian Overseas Bank to PNB, we have, I think, at least more than a half a dozen banks on our muster. Okay, so it's a very diverse mix from banking to tourism to power sector companies to oil companies to, of course, railways. When you look at, we are the agency for Southern Central Railway, for South Railway. We've been doing work for them. Central Railways, not Central Railways as such. So that's on the government side. Plus, we also work on governments of various states, which include states of Uttar Pradesh, states of Maharashtra, states of Tamil Nadu, and which else? Yeah. These are states.
That's a good mix.
Okay. So, and also when we work on the state, we work on whatever major events the states have. Like for UP, we've been working on their investor summits. Currently, the minister of the state is there in the Davos. We are handling that. We handle the social medias, plus whatever the institutions from the state. So it's a well diversified portfolio mix of PSUs, government, and brands.
So we have a follow-up question from an investor. Also provide margin across the segment which you have provided.
Which we discussed media wise. We discussed
Margins in this vary. Print currently because of the load, and you know how the media mix is changing. Margin in print is the lowest, could be anywhere between 5 to 7%. Television also is around the same, 6 to 8%. Digital is generally 10 to 14%. Events go up about 15 plus, 15 to 20%. And that leaves us out of home also in the 10 plus category. But the larger volumes, obviously, print being one of the largest medium, print means the newspapers and magazines, they being the largest medium, the volume of spend is in that, which is what is decreasing, and the digital part is going up year on year.
The next question is, if you share the margin profile across these four segments, that is WOH, print, digital.
WOH print.
WOH means
Out of home.
OH, yeah.
Just shared. I didn't. What is the question?
The question is, if you share the EBITDA margin profile across these four segments, that is WOH, print, digital, etc.
EBITDA, what period?
EBITDA
That
margins.
is not mentioned specifically.
No, but that you can't. It's a running year. How do I give you EBITDA margins right now?
And the activity wise person record is overall so we can give you. But activity wise to we are not ready with that.
Okay, sir. The next question is, what is your strategy to expand government clientele, securing more orders from them?
So government business generally comes with a lot of eligibility criteria. As I told you, governments have woken up and they need to be the public image, etc. And their communication has to improve. And I'm sure you all must have been seeing that there is a change how governments are promoting any scheme which is to be launched on the center or the state side. And so there's a lot of eligibility criteria which comes in, which could be turnover, which could be previous, similar experiences, which could be the kind of resources or the people talent that you have in house, etc. So because our size helps us in pitching for that business, pitching for the businesses, and because of the eligibility and also the marking that they put in, generally very few agencies are able to qualify for that. And then mostly it is a matter of dividing between those. Governments generally don't choose one agency. They would land up choosing 2 to 3, maybe up to 4 agencies as a panel, and then the business gets divided between them.
Okay, sir. The next question is, why company has purchased 5.2 CR land in Goa? Can't this money should be invested for future growth?
We have recently done that because we feel that there is a good potential. It's an area which is going to be developed very majorly in Goa. This is if you were to look at exactly where it is, you will understand that in the next 3 years that's going to have a huge upside. And it's a very small, and we've not invested, we've just blocked a little bit of advance money right now. We haven't put in. The value is 5.2 crores, but we have not paid 5.2 crores for it as yet.
Okay, sir. The next question is, why debtor days are so high? What is your strategy to reduce this in coming years?
Why? Sorry, what's the question?
Why debtor days so high? What is your strategy to reduce this in coming years?
Receivables are so high. Receivables are so high. But this is a norm of the industry. It means in the
This is standard industry. This industry normally remains over here in this category only. So I guess there's not something any different. If you were to look at any even if you look at any other similar companies, we will find it similar.
Doesn't get correctly on to
What's it? That's what it is.
Okay, so the next question is, what's our strategy to tap into the global market? Any plans to open a subsidiary there?
I think probably all of you missed the question. We missed the statement made by my colleague Ranjan. We have just recently been able to establish a subsidiary in Dubai for the international market, especially the Middle East market, which comprises of maybe UAE, Saudi Arabia, which is a big market, emerging to be a big market, and other areas around it, which could be Bahrain or Qatar, etc. So we've already established the first part. The company has been registered, and now we're in the process in the next few months to put up the team there and start to work there.
Okay, sir. Next question is, staying with the technology-led ad spend topic here, my question. How is Crayons positioning its business model to benefit from AI's potential rather than being disrupted by it? And what's the defensive measures are you taking to ensure that low-cost AI tools don't erode your creative service fees?
As I mentioned earlier, AI is an enabler. It's not it's a disruption, maybe in terms of how the speed is to increase, or how AI is making everything much more efficiently than what we were doing earlier, probably in any industry, not only us. Beyond that, I would say that the whole objective is, and that's what we are ramping up for, that the new talent that we are hiring is all completely AI, let's say AI trained professionals. So that's the change, is the slow shift that we are bringing about in our capabilities in-house. And if once we are able to establish completely, obviously we will get the advantage of that. So we would not be using the traditional medium of doing creative or doing strategy or doing our media planning or doing finance accounts. So in every aspect, it will be helping us become a much more efficient and a much more swift agency.
The next question is, any new projects that you have signed, any value pipeline of the same? Also, if you're comfortable to give revenue guidance.
So it's a regular process. Any new means, obviously from time to time, every month, 2 months, some new project keeps coming up. So our business is not a consistent, it's not like a manufacturing business. So there are regular new projects which come up. And so, I mean, we cannot differentiate and say that something absolutely new. So I can't explain to you. It's not comparable to any kind of sales or a manufacturing business. And any client can come with any new project, and we would be doing that. Regarding revenue, what we've told you that this year we are going to do definitely much better than last year. I guess at least a 20% growth. And in the next year also, we're looking at the same kind of bracket of growth. So that's the best I can tell you. I mean, I can't otherwise give you any specifics on this.
Sir, next question is, we have good cash on book. Please share the logic behind cash. And are we planning to reward shareholders if you don't have any plans for this cash utilization?
We just mentioned to you that with AI, a lot of changes happening and a lot more needs to be done, which is what we are trying to do in the creative side, in the studio, in the production side. So we would be actually, once this AI stabilizes a bit, the tech is moving too fast. So putting in all the money in bringing the tech in-house would be a bit risky at this point of time, because God knows what's going to happen in 1 year. Let's it stabilize, and that's what we are going to be using to expand our entire offering to the client. And that's where we were telling you the efficiency will come from.
And that funds to be utilized for that later.
So the next question is, what is moat and 3 key risks in our businesses? If you could talk about risk factors in detail.
Sorry?
Yes, sir.
So it has all the same general risk factors as any industry, global or national problems, issues. Advertising obviously takes a hit first and foremost if anything goes wrong on the global side or even on the national side. And any crisis which comes up leads to problems. No specific for this industry, but yes, advertising is one of the first hit.
So three risk factors you said. One, like he said, is global economic conditions which affect anything happening anywhere. The economic condition gets affected, so the corporate spend take a cut on the advertising. That's one. That's general. Second is of your key clients losing a client. That's always a risk. But the safeguard here is in our case, like we say, have a good balance of private and government. In private, we have long relationship. In government, normally you sign up a contract for a year, 2 years, or 3 years. So you're sure you're secure for at least a certain period that okay, this business is there. So if you sign something with the government today, you know that it's going to be there for at least a year or the sign period. And the third thing is, I think, people, because it's the category driven by resource. And at Crayons, I do take pride in the fact that most of our key people at the senior management have been there for long. So there's a fairly stable structure in terms of our branch heads, our profit center heads, or key management people. So which gives us a little cushion in the sense, of course, people will keep coming and going, but then we have a fair amount of stable structure in terms of that. So that minimizes the risk what industry normally faces.
So we have a follow-up question. That is, can you please throw some light on ongoing future? What will be our sustainable margins for the company?
What will be? Sorry?
Future
What will be our
sustainable,
sustainable margins for the company?
media sustainable margins.
Overall, overall margin.
Overall sustainable margins.
I guess currently won't be able to give you any specific numbers, but yes, as we explained to you, as we go about with this tech change happening, it'll only improve from where we are today.
The next question is number of new clients acquired in the last quarter. Also, what percentage of new business comes through referral versus outreach?
What is the second part?
Also, what percentage of new business comes through referral versus outreach?
What causes?
Referral or outreach?
Outreach, no, it in the referral is somebody gives us a reference and we get the business. So,
Okay, the two parts. First, new businesses. Like Mr. Kunal explained, when business happened, it may come from a new business acquired, or it can happen as a new project or a new campaign coming out of existing ones. So we have both these things happening. We are getting mandates or campaigns activated through our existing clients. So that's one. Second, yeah, of course, we picked up new businesses in the last 1 quarter. Shall I name it? Yeah.
Yeah.
We won a huge mandate for Southern Central Railway to handle the entire social media for them. We've done that. We've also done Indian Bank. We won.
yeah, Indian Bank.
Okay. Then who else? Then Maharashtra Tourism is also like we picked up renewed again. We did that, and what else? I mean, there's so many,
And that's how it keeps coming. So it's not that.
It's a regular stream of new.
Yeah, and then there are fixed tenure government clients, which once the tenure gets over, it's not necessary that the next tenure you will be chosen or you will be able to be one of the eligible bidders. So that keeps happening at the same, similarly. So some new clients will come and some old clients where the fixed tenure gets over, we have to exit from there. But your question, the bigger question, referral does not come in the government or PSUs. Referral is also only valid in private sector, where at times when marketing heads shift from one job to another job, or the clients that you're serving, their colleagues they refer to their colleagues and you do that. So that does happen, but that's not too much. That can't be significant. However, outreach is the only way that you would get serious business, because this is very very, inherent part of the marketing strategy. So normally referrals would not be the only way to, determine or decide an agency. So there would be a lot more required to be able to get that account.
The next question is, how do you compete with other players, and can you name some of your peers who directly compete with you?
That's a very open-ended question. This category is crowded with agencies and you compete with so many of them. And again, how do you compete? You compete on strengths, you compete on your track record, you compete on the kind of work you do. I think it's a very broad kind of a question.
The government people, they are pitching me the tender base. If there are 2, 3, 4, 5 tenders, then definitely we will win on our strength.
So you always pitch on your competence, on your track record. And of course, when it comes to government, then the financial comes into play, where you have to have capability and you have to be effective financially. You have to win the financial bid as well.
Okay, the next question is, we have short-term loans and advances of rupees 55.16 crore as per September 25 balance sheet. Whom have we given these advances? And we have current assets 16 crores as per September 25 balance sheet. Can you please provide details on the same?
I guess this will be all available on the stock exchange. This thing. Yeah. This is the same one. Previous somebody's asked whether it was 75 crores. Now somebody's come with 55 crores. So I think there's a confusion on what numbers are being discussed. This is the same point we just told you, that whatever is in current assets or operating assets is fact that there's a lot of work which goes unbilled at a particular time, and those are advances paid out for those jobs which may not have been billed. So they will remain there till we are able to bill the assignment of the project. And also whatever surplus cash is sitting or getting some kind of a return for it, that's how we put it there. So I guess both the figures are still not correct. It would be definitely different from...
Yeah, 75 crore is the trade receivables. They are not debtors.
Yeah, trade receivables. I think there's a clarity to be made. What we are seeing, the 75 crores is coming as trade receivables. That's the outstanding that we have to collect. Our business is completely credit-based business. So there is no question of advance coming in. It's all credit-based.
Okay, the next question is, what portion of our revenue today accounts for clients with fixed tenure contracts? Are there any clients that account for a sizable portion of total revenue, 10% or more?
Sorry, what is the question? You'll have to give it again.
Any client who has more than 10% of total revenue? Any particular client?
So let's have the question again.
I say it again.
So, what portion of our revenue today accounts for clients with fixed tenure contracts? And the second question is, are there any clients that account for a sizable portion, that is 10% or more of total revenue?
Very difficult to offhand tell you, but yes, there won't be any. If there would be maybe one client, or maybe, I don't think so. There'll be over 10% of the revenue. There shouldn't be more than one client, or maybe two clients.
And this DC,
I guess, and it varies. It will vary from any quarter to quarter or half year to half year. It does not mean that there's one client who's spending. So in one particular period, there could be. Number one. Number two, most contracts, there are no ad hoc contracts. They're all fixed tenure contracts. So even with private, it will be at least 1 year and could be even 2 years or 3 years, similar to government or public sector. However, in private, continuity can be much longer. In government, generally the tenure is limited to 3 years. And then there's always a shift.
Okay. Next question is, why there is significant increase in short-term and long-term borrowing?
There's no increase in long-term and short-term. Long-term borrowings have reduced. March 2025 being 3.28 crore long-term borrowing, and in September 30th, this is 2.84 crore. So this has been reduced, not increased, long-term borrowings. Yes, short-term borrowings are a bit increased from 2.15 crore to 13.03 crore. So this is short-term borrowing is the CC limit, cash credit limit. So it's not the pure borrowings. It all depends on our credit given to the client. So it's not the borrowing, it's only the cash credit limit from the bank. So it depends.
So the next question is, why invest in Goa, not a city with more business prospects?
You already answered, I think this.
Well, I just answered it earlier, so I guess that is a repeat of the answer.
Okay, sir. Do we have any other questions? Please put them in the Q&A box. So we have a follow-up question. Short-term borrowings has increased from 2.15 to 13.3 CR in balance sheet. We have already answered it.
Yeah.
Yeah, these are cash credit limit.
Why would be the sustainable, what would be the sustainable margins going forward? Repetitive
We
question.
discussed it earlier.
Yes,
There
yes,
can't be any
yes.
specific. We are not in a position at the middle of the year to give you a specific answer or an accurate answer on this.
Yes. Do you have any other questions? Please put them in the chat box. How do we plan to increase shareholder wealth?
Yeah, obviously, increasing business and margins would automatically lead to shareholders benefiting in the times to come. And obviously, it is our it's our full effort to make sure that in the coming years, shareholders are happy with the kind of performance that we carry out, leading to that benefit to them.
Are we planning to switching to main board?
We'll take a call on this when we come to that. But right now we are not eligible, so I don't know what would those methods would be and what the process would be, because it's still about 6 months, 7 months, and maybe rules may change, may have variation, may happen. So we take it when we are close, when we are ready to qualify for it.
Okay, we have one question. How do you get government projects? Is it tender based? And what is the vision for the management for next 3 years?
So government business, all government business has to be tender based, as everybody is aware. Government cannot do any kind of assignment without tenders for any type of job, not only our industry, any industry. And 3 year would be a very difficult, subject for us. Yes, we have told you that the next year financially we are confident we will definitely do above north of 20% of what we closed this year. We are sure that we'll be between 20 and 25%, 26, 27. That part we are quite confident. Rest beyond that would be very difficult to forecast today.
Do we have any other questions? Thank you. I would like to express our gratitude to the entire team at Crayons Advertising Limited for taking the time to join us and provide such detailed responses to the questions. We also appreciate all the participants for the engagement. If any questions remain unanswered, feel free to reach out to us. You may disconnect now.
Thank you.
Okay, thank you.
Thank you. Now, there you go.
So,